Hi everyone, this is Amir Syed. Today I'm here with a very close friend of mine and one of the best certified public accountants in the city of Chicago and possibly nationally in my network. Gaurang Patel. Gaur, thanks for being here with me today.
Thanks.
We're shooting this video at the beginning of the year when a lot of people are thinking about purchasing their first home or selling their home and getting a second home. Thinking about filing their tax returns, they just got their W-2s, things like that in order. So we're going to give you a very brief kind of Q&A with one another on some of the common questions that we get throughout our professional lives to help you make better decisions. So Gaur, on your end, what are some of the common mistakes that you see people make when it comes to their taxes?
Some of the common mistakes that I see is, people don't plan, ahead of time. So, during the course of the year, there's a lot of things that, people can do. For example, putting money towards a health savings account or, thinking about buying a home so that they can actually decrease their effective tax rate. Because whenever you buy a home, you're able to, deduct the mortgage interest, which actually provides a really good tax shelter, especially if you're earning a lot of money. So, those are the kind of things that I think are pretty important.
Nice. And on my end, in the mortgage world, commonly when clients come into my office and I actually go through the home consult presentation with them, some of the common mistakes that I see on tax returns is Schedule E, if there's any rental income, the account will not have the correct expenses, or sometimes even forget to deduct, like the interest, for example, on the investment property. So I see these little mistakes. If they self-prepare them, I see those mistakes. Another common mistake that I'll see is that lag effect when someone wants to go file taxes, if they're self-employed, and they wait till the last minute, and it actually affects their ability to get a home mortgage. So if you're self-employed, I would really urge you, 1099 contractor or self-employed home buyer, you really want to start the process early on, because there are certain deductions that you're maximizing that are actually affecting your qualifications to be able to get a mortgage.
Yeah, absolutely.
So what would you say some of the small business owners are making mistakes on when it comes to their taxes in your world?
On the balance sheet, mixing up their liabilities in terms of classifying incorrectly as a short-term liability instead of a long-term liability. And those kind of mistakes are actually costly. I think, especially when they're going to get a mortgage and going through underwriting. I've seen a lot of underwriters actually just totally deny it because they question that whole tax return, whether it's correct or not.
We have a lot of real estate agents that are going to be watching this. And so, real estate agents, they're kind of at their own behest to be able to file their taxes, as opposed to a W-2 earner like myself where taxes are only taken out. What are some common mistakes you'll see from real estate agents, or what are some advice that you might have for a real estate agent to be able to maximize their taxes?
Well, real estate agents, I think with the real estate agents, they mostly get a lot of their income through commissions. So, with commissions, there's certain reasonable expenses that, they're able to deduct, for example, like mileage or, meals and entertainment if you're taking out a client, just making sure that you're able to maximize those expenses and understanding what you can actually deduct. I think that's really important. But, Amir, I have a question for you. A lot of my clients actually, really get confused with closing costs. And, I think, do you have, any benchmark as to what they should be paying? And, how do they compare, one mortgage lender against the other?
Yeah, great question. So when it comes to the comparison between one mortgage lender and another, specifically towards closing costs, there's a lot of different factors you should take into place. Obviously, rate, reputation, expertise, local, I think is very important. When it comes to actual closing costs, the APR compared to the actual interest rate is the key benchmark. You'll always be able to see exactly how much settlement charges and closing costs there are through the annual percentage rate. That amount is essentially the cost of borrowing in the first year, all the closing costs. So if your interest rate, for example, is 3.5 and your APR is 4%, then you know that there's high closing costs, so to say, right? When it comes to a refinance compared to a purchase, it's going to be two different ball games. On a refinance, typically you should have very similar APR to your actual interest rate, right? Because fees are a lot lower in refinances. When it comes to a purchase, you have property tax stamps. That's a mathematical model. In Cook County here in Chicago, for example, for every $1,000 you spend, it's $7.50. Okay, it's very expensive. Then there's title insurance. There's your attorney fee. There's your appraisal fee. There's things like that. So I would say get a good faith estimate. compare them,
Yeah.
right? Send them to your attorney, have your attorney review it, consider even sending it to your accountant to be a smart consumer, and making sure all the fees match up. And then when you go to closing, you want to have your HUD-1 settlement statement at least a day before to review that and compare it to your good faith estimate. That's my best advice. So you make sure there's nothing that's changed at closing.
Yeah.
You know?
All right.
I would say also what's important is, as a first-time buyer, definitely go see your mortgage lender face to face. What we're seeing a lot of common pitfalls is people are getting pre-qualified, not actually pre-approved. So you mentioned underwriting earlier, Gar. In my world, if you're not actually pre-underwriting it during the pre-approval process, it can cause a lot of issues when you actually go and find that home. Because the last thing you want is be able to find that home and have your emotions tied, and then send your tax returns and your bank statement. A good lender should ask you for all that up front at the very beginning of the process to catch a lot of mistakes, you know?
All right, that's really good advice, though.
Definitely. So Gar is going to buy his home with us, so this is all on camera.
I definitely recommend it. It's helped a lot of my clients. So.
Definitely, Gar.
Right.
Well, I appreciate it. If you have any questions, we're going to put a slide at the end of this with both our contact information. Please just call and ask. I think how Gar and I live our lives and our business, and why we've been able to really click, is we love to give advice. We're just wired that way. We're cut from the same cloth. We love to educate. So just ask questions. We're here to help. No pressure or anything like that. Okay? This is Amir Syed with Pro Mortgage, and this is Gaurang Patel with South Loop CPA. We're happy to be here with you. Talk to you soon. Bye.
Thanks.